Hey guys, welcome back to Your Nifty Guy. I hope all of you are doing well. So today the market clearly leaned bearish, not in panic, but with intent. The selling pressure was controlled, deliberate, and that's exactly where most traders either get impatient or start overthinking. In this video, we'll break down what actually drove today's bearish move, what the price action is quietly telling us, and how to approach tomorrow without chasing weakness or falling into emotional trades. If your goal is to trade with structure, clarity, and discipline, not noise, make sure you watch this till the end. And if you haven't already hit the like button, hit it right now. Subscribe to the channel because we plan the market every single day the right way. So let's jump straight onto the charts. Markets today opened with a gap down of 72, 75, something around in 70s odd points, right? And today's open is equals to the high, right? So from the start of the day, we close near the lows of the day, right? Uh, this was a clear lower high, lower low structure. And as we approached the support levels that we had pre-marked on the charts, there was also a clear open-ended divergence on RSI, right? If you can see, while market was making new lows, RSI was making new highs, right? And we were at a support. So this is where I actually punched in the first and only trade of the day at the break of this particular swing high as a double bottom trade from a support area. This is where I had entered. Immediately after entering, the position went into some profits, rather insignificant profit, and which got immediately taken away in this red candle. I got out almost at cost. Post the charges, I will be in net negative for today, 100% sure. So this is where I exactly got out at cost because this did not look like a good breakout, right? So in case if this would have to continue, I was waiting for the markets to actually take this swing out. But since that did not happen and the markets were reversing at my cost, I got out of the trade. Now, post this was a complete chaos again, sideways market. Market tried to break out once again, and this was a very good case of a trap trading, right? Markets broke out above this swing as well with RSI divergence, but then immediately went into a selling zone. So all those people who would have created long entries around here would have been trapped brutally, and this is where uh, a good trade could have been taken, but then again, I got tied up with some family work in the second half, so I did not even observe the expiry setup, if at all it was into play. So anybody who was observing the change of open interest and the expiry setup that we have, if you observed and you found something or you saw something, please let me know in the comments. I was away from the screen, so did not observe. And again, post this one trade which closed at cost for me, I thought it's better to stay away from the expiry. That now we'll plan the trade setup for tomorrow. This fib level has done its job. We'll be deleting this. We don't need this. We don't need this for tomorrow. All right. So on a daily time frame today, the candle is a reversal candle. That is what we call a candlestick, which fulfills all the three conditions, which is the high is lower than previous high, the low is lower than previous low, and we have got a closing which is below the previous low, right? Now, combined with the structure on daily time frame, we are still in a lower high, lower low structure, right? So we might see some lower levels. So this is what I am expecting. But then again, like we always say, we should not be predicting anything, but be prepared for anything. So we'll prepare ourselves for all possible scenarios. Maybe we are moving in a bigger range, in a sideways range, right? Out here, the structure was higher high, higher low. Now it has changed to lower high, lower low. Again, we might take support from these levels, and then again the structure might change. We might be spending some time in consolidation, right? So these are phases which Nifty goes through. If you observe around here, we were in a sideways consolidation for a pretty long time. If we go back to this a particular period in time, yes. If you observe this particular phase, right, extremely sideways. Markets go both going up and down, but then again, extremely sideways price action, right? Uh, there was consolidation area earlier as well. Nevertheless, so what is Nifty hinting at, or what is Nifty holding for us in the future? Well, the answer is nobody knows. All we can do is prepare for the very next day and let's see how things goes. So on a daily time frame, we have a negative candle. Now, what needs to be seen is whether we are getting a follow through tomorrow, or again we are going sideways. Was today just an expiry play, the entire down move, or again we are planning to go further down, test lower support levels, right? So these are the levels which can be expected 25,400 if this level breaches as well. So that is something that we will be keeping an eye on 75 minutes time frame and 40 and 4 hours time frame. Again, the structure is uh, turning to lower high, lower low, right? So out here in the 75 minutes time frame, we saw a good double bottom forming. So this was a higher high which had formed, right? A higher low had formed, but then again, we did not continue into another higher high, right? So the structure is still bearish. And right now, if we see, this is the high which was formed yesterday. And today, again, we have formed a low which is lower than yesterday. So again, the structure has kind of flipped on the 75 minute time frame as well. So I will say it is much better to uh, keep a close eye on how things are happening. So this is the weekly time frame fib levels from which we have already taken a support once, right? So if we go to the weekly charts as well, now I'm not removing this entirely because we have taken a bounce once and second. Yeah, we have already taken a bounce once, and like I said, in case if the structure has to change on the daily time frame, it is not that after it touches, it's going to go up, right? So out here, this is the weekly time frame support. In case if we are taking a support at the weekly time frame fib levels, it is not that we are going to go up like this from here, right? So this is something where we might form a higher low, and then the structure changes, and then we eventually see something like this, right? So these are all the probabilistic things, right? I keep on building all these theories in my mind, and that is the reason I still am having this particular level on my chart. Usually, you have seen in my analysis, all those people who watch my videos regularly, is once a fib level has done its job, just like the 75 minutes fib level, uh, which has done its job, we delete it, right? We don't keep those levels on our charts forever. And so yes, this is something which that is the reason why I have kept it. So not necessarily that, of course, if we come here, we are going to take a long entry again. No, this has done its job once, but then again on the daily time frame, if we need to change the structure, we need to create a higher low. That just like I explained, and that is something that we need to see if that's happening at all, right? For tomorrow, we'll keep the plan of action very simple. Number one, today was a good trending day with open equals to high market, although not with intensity, but like I said, with intent clearly showing bearishness. There was no fight or no attempt at all from the bulls, right? The bears were completely in control. So tomorrow, if we see a bearish candle giving us a closing below today's low, and then the high of that candle gets taken out, that is the cue to go long, right? That is the cue to go long with a trap trading setup, right? Because all those people who would have missed this rally and would have shorted the markets at the break of previous day's low. And if the high of that candle gets taken out, that is where we enter into longs for a trap trade, right? And on the 75 minutes time frame, we'll be using this swing with today's low. And we'll mark the 0.5 to 0.618 zone. Of course, that's going to act as a resistance. So back to the 15 minutes time frame. Needless to say, below this we are short. If we open with some gap up and we see some negative price action around these levels, this is the place to go short. Long entries to be planned only above this particular zone, right? This is what how I will be looking at the markets tomorrow. So yeah, that's the simple plan for tomorrow. Remember, bearish markets don't demand aggression, they demand patience and precision. The goal isn't to trade more, it's to trade better. Stick to the plan, respect the price, and let the market come to you. I'll see you tomorrow with a fresh breakdown. Until then, stay disciplined, stay focused, and cheers. Thanks for tuning in.